Let's take a look at the commodities now, where gold prices are inching towards that 1900 mark. $10 of a gain coming in the European markets right now. Good going in the Indian markets as well. But it is profit taking in most of those other risky assets like crude prices, base metals. All of that is trading in the red. Let's get in our guest then, and Milan Bavishi, Head Commodity Research, Inventure Growth and Securities, now joins us to get his sense of strategies in all of those commodities. Milan, hi, welcome to the show. Let's start with gold first. And what kind of levels are you looking at now? Is it still a buy at these high levels?
See, gold has been the biggest beneficiary of the global onslaught on equities, as well as the weak economic data around the world is giving support to gold prices. Now, current levels of 1893 would suggest that gold could be soon retesting the previous highs of 1917 on COMEX. However, I would like to caution the traders that the volatility in gold will increase, the stop losses will become deeper, and then the risk-reward ratio will not be so favorable. So I would suggest that they remain nimble-footed and book profits at regular intervals. However, at the moment, gold is a buy with a target of 29,077 and a stop loss of 27,215.
And how about the silver prices? Do you think they would follow gold on the higher side?
See, silver generally follows gold, but what is holding back the full potential of silver right now is, see, the demand comes from industrial applications. Like 55% of the total demand comes from industries. Now, weak economic arena is holding back silver prices. Still, silver is a buy on declines, and I would have my targets at 69,500 and a stop loss of 64,000. I would like to share one interesting thing. Silver prices and even gold prices between September 1st to 31st December have always increased in last 6 years. The average returns for silver is 17%, and that for gold is 13%. So this trimester basically is favorable for gold and silver prices.
Well, absolutely. But how about the crude prices? Because this is the hurricane activity, and even apart from that, we have seen crude prices decline 1% down in the European markets right now. Are you selling at these levels?
Yes, we are sellers in crude oil. Why? Because, see, the job data in US has come out very weak. There is onslaught on equities which is pulling downward pressure on crude prices. Technically, crude is trading with lower tops and lower bottoms on weekly charts as well. If you see daily moving averages, crude is trading below 200-day moving average, which is a long-term moving average. Even the 50-day moving average is below 200-day moving average. Now, all these things suggest that crude is a sell, clearly. My targets for crude is 3437 with a stop loss of 4130.
All right, Milan, we'll have to let you go at that. Thank you so much for joining us with your strategies. That's the cue coming in from Inventure. They are buying into gold, silver and copper today, but selling into crude prices, at least for the intraday markets.